Goersch Trend Pro contains the regular Goersch Trend indicator, which some of you may already know as a histogram below the chart, but the Goersch Trend Pro version also comes as a complete trading system featuring entry signals, stop losses, profit targets, break even, and trading stops.
At first, we're going to take a look at the Goersch Trend indicator. The Goersch Trend indicator is this histogram. And what's special about it is that it's very, very easy to read, actually. So it has really a lot of information in it. It's working with a lot of different types of information, but the purpose was to have an indicator that's very easy to read, very easy to see if a market is in a valid uptrend or in a valid downtrend. We also are able to see the trend changes and the trend strength, actually, so the momentum in the market. So to be honest, you have everything you need in one indicator. And that's very, very nice. So it's very convenient as well is that it's working out of the box. So there's nothing that has to be adjusted if you're using it for different assets or for different time frames. It's doing everything completely automatically by itself. And I think it might be best to switch directly in the platform and just show you the indicator and show you how you'd be able to use it. Well, this is the actual chart of the S&P 500. As we see, maybe we are in the making of something like a tradable bottom. We saw a nice follow through today, and we see that Goersch Trend already changed once in the long direction for a short time frame for 1 day. Then we got this 2-day correction, quite big. So the Goersch Trend went down again. And I guess if we see a nice green candle today, then I think Goersch Trend will also change in the green again, and we will have an uptrend that is tradable. So if we take a look in the history, I'm just going to show you very quick how it works. So what's important is to always check at first, is the market in an uptrend or in a downtrend? So, and here starting with October 2019, we had a nice uptrend. We see the momentum is here. The bars are getting longer. And so we see all this way up here is a valid uptrend. And as you can see, the indicator is working quite fast. So we have one big down day that's going below the 50-day moving average as well. And we see here's directly the switch from the long side to the short side. And we also can see in this candle already that the momentum was going down and the trend strength was going down very fast. So this is like a signal for you that the long direction might not be the correct direction at the moment. And then we saw very, very fast the indicator moving to the downside. You see it's following the trend. And when we are at the lowest point, we have the lowest point in the indicator as well. And from there on, we see, oh, okay, maybe the downtrend is over because we see these candles getting smaller and smaller and smaller. And we have a tradable pattern up here where you see, okay, this trend is valid again. We are above the 50-day moving average. We have higher highs, higher lows. So this might be a good place to take the long direction again. So we came out of the trade around here and we were able to enter again at the lower price down here. So that's quite a nice thing. And you see all the way up here, everything is fine. We see we do have this nice momentum, but at this place, we see we have higher highs in the price, but lower highs in the indicator. So you can use it actually for divergences as well. So this is a sign that you have to be a little bit careful. There might be a bigger down move in the making. And that's directly what we saw here, like an ABC correction, a high that's not going above the last high. And then we see we have a higher low. And here we have the next divergence. We have higher lows in the market. We have lower lows in the indicator. That's a bullish divergence, actually. And we see the market is moving up again, going above this trend line and moving up again and move. And very nice. We see it with the Goersch trend. We can follow the complete way, the complete uptrend until we see here, okay, this might be a problem as well. We see higher highs in the price, lower highs in the indicator, but we don't see a trend change. We have 1 day down here that's reversed directly at the next day. So everything is fine on the way up, on the way up, on the way up. And here we see, okay, this trend is broken. We are not going to play the long side anymore. This was a nice situation for a short setup. You see, we have this big trend line here coming from the Corona lows, from the COVID lows here in March 20, going up all the way until January 2022. We have this big divergence here. We see new highs in the price, no new highs in the indicator, so big divergence. And with this break of the trend line, GershTrend was already to the downside, so we were able to take the short side here. In this situation, bullish divergence in the Goersch trend, we see the market is moving up again. You can use it as a filter for trading setups. If I get a long entry signal in the market, the first thing I'm going to check is how about my indicator. If it's not green, if it's not moving to the upside, I'm not going to take the long trade. Same thing for the short trade as well. And now we brought this thing one step further, and we developed this Goersch Trend Pro. And in the Goersch Trend Pro package, you get, of course, the Goersch Trend indicator, but you also get the Goersch Signals indicator. And the Goersch Signals indicator is creating long and short setups and is always with the trend direction. So the nice thing is, long setups are only created if a market or if an asset is in a strong uptrend, and short signals are only generated if the market is in a strong downtrend. You get entry warnings, so you get this warning, and afterwards you can put your entry order in your trading system, and then everything works by itself, because you do not only get the entry point, you also get the target, the first target, the second target, and you get the stop loss for the trade. Everything is shown in Trading View. So maybe the first one we take a look at is Occidental Petroleum. We see this nice uptrend here. Energy markets, energy stocks actually are the best stocks in this year. So we have a lot of stocks with valid uptrends, with strong uptrends. And if we take a look at the signals here, we see this was my last trade on the long side here with Occidental Petroleum. We got this nice entry setup here on the 4th of April. And we see the first target was reached, the second target was reached. With the entrance, you directly get the target prices so that you are able to put a limit in your trading platform for the first half of the trade, and afterwards for the second half of the trade. You see the stop loss is trailed automatically. The system is always the same. If the first target is hit, the first half of the trade closed with a profit, and for the second half, the stop directly goes to the break-even level, so that you're not able to lose any money on this trade. You already earned with the first half and have the possibility to get the second half in the target range as well. This is what happened here 3 days ago with Occidental Petroleum. The way this indicator works is, what we need is a stock or any other symbol with a valid trend. And normally I do not want to buy up here. I want to buy after we saw a retracement. I want the market to retrace, and I also want the market to begin to move in the trend direction again. And then somewhere around here, I want to have my entry level. And then it depends on how far this entry level is from the last low. We either have the stop at this low or at this low. So the strategy is deciding by itself where the stop loss is taken. So actually what we are doing is we are trading risk-reward ratios 1:1 for the first half of the trade and 2:1 for the second half of the trade. So we have Zebra Technologies here. At first, the stock was in a valid uptrend. We can see it here. We have higher highs, higher lows. And what's very important as well is you can see here and here that you got trade warnings, but the actual trade was never filled because we didn't get a follow through. So what we are waiting for is trade warnings that say, okay, the type of situation we need in the market for having a suitable trade is there, but afterwards we need a follow through. If we don't get a follow through, we do not get a trade. Simple as that. And the nice thing is sometimes if you don't get a follow through, markets are just moving actually in the wrong direction. But if we get a follow through, like here, we have it here. We see this first candle here is the signal candle. The second candle is the follow through. We get a higher high on the next day. So the trade is filled. And on the long side, we reach the first target. Then the market is retracing. It's not reaching the second target, but with the second half of the trade, we also made a profit. So the entry level was down here. So the first trade, the first half got this profit and the second half a little bit smaller. But what I wanted to show you actually is that we have the long signals only if there is a valid uptrend. In the moment the trend changes to the downside, there are no long signals anymore. But if we get a valid signal in the short direction, we get the short signal. So what we are doing all the time is we are following the trend. And to be honest, the easiest way to work in the market is simple trend following strategies. You know, the trend is the biggest advantage you can get in terms of trading, in terms of making profits. So if you see that the trend is on the upside, we need long trades. If we see the trend is to the downside, we definitely need short trades. And the way it works here is we do have this entry candle here, the warning candle. Afterwards, we have the follow through to the downside. I'm going to make it a little bit larger so you can see it. Warning candle. This one is the entry candle. Stop is up here above the last high. So the stop was not hit here in this retracement. And then we see the market trending to the downside, hitting the first target and here hitting the second target, and everything is fine. So we have one stock that changed the direction from long to short, and we made our profit on the long side and also on the short side as well. Salesforce, I think everybody knows this stock as well. So we have been in a valid uptrend here. You can see this here, valid uptrend. We get the long signal, we hit the first profit target on the long side, we hit the second profit target on the long side, and then the market changes, going down here, moving below the 50-day moving average and developing a strong downtrend. Here we already get the first short signal, but no follow through. So this was not a trade, and the actual trade was over here. And what you're always going to see is if the sequency is to the downside and we see a valid downtrend, what we need to enter the trade is a retracement. We want to see a retracement. And after the retracement, if the trend is going to continue, we are going to short the market. So first profit target hit, second profit target hit, and that's done. What we also can do is if you want to be a little bit more active, you do not have to use the daily chart. You also can use the 4-hour chart or something like that. Let's take a look at Alibaba. Yeah, what we see here is a short trade. We hit the target. The next short trade, we hit the first target. The second one was not hit. We got stopped up here with a small profit. And here the same again. First target got hit, and second half got stopped break even. And what we can do now is we can switch it to the 4-hour chart, and you see you get a little bit faster trades. You know, the trade frequency will be a little bit more, and we also can trade like the big stocks that we've seen here, like Microsoft, that moved to the downside for quite some time, and we hit the short signals here and here the same thing. First target got hit, second one got stopped out with a profit as well. So what I would advise you is, if you're trading in calm, quiet trend markets to the upside, use a larger time frame, because markets to the upside are going a little bit slower and a little bit more relaxed to the upside. But markets that are moving to the downside are a lot faster. And it's clever to take your profits a little bit earlier in short trades. You know, like short trades and long trades shouldn't be treated the same. So it's quite a good idea to take a longer time frame for the long trades and a shorter time frame for the short trades. Let's take a look at the stock of Oracle. Yeah, you can see it here. If you take a look at the Goersch trend here, you see how strong the downtrend was in the 4-hour chart. And what we see is first trade here in the beginning of January. We hit the target in the middle of February. Second trade here at the end of April, and we've been out also at the end of April. This trade only took us 1 week.
So Martin mentioned that he uses this indicator primarily for trading stocks, equities, and indices on the daily time frame or on the 4-hour time frame. And this is a great use case for this indicator. But this indicator and the signals, they can also be used on much lower time frame, for example, for scalping or day trading purposes. I have opened up here the Nasdaq E-mini futures on the 5-minute time frame. The indicator is applied both the Goersch trend histogram and the signals indicator. And as you can see here, the indicator is picking up warnings and entries on this time frame as well with quite some accuracy. So this indicator can really be used on any time frame.